Imagine this for a second. You lend your friend $100. A week later, he tells you, I'll pay you back after my next sale. Now pause. Is that money already yours? Did you earn it? Or does it exist only in your head? That single question is the reason accounting principles exist. Without rules, money becomes guesswork. With rules, money becomes information. This is the Learning Studio, and today we're breaking down the core accounting principles, the invisible logic behind every balance sheet, income statement, and financial decision you'll ever see. At its core, accounting principles are simply agreed-upon rules for answering one question consistently: what actually happened financially? They make sure a small cafe in London and a multinational company in New York record money in a way others can understand and trust. Everything in accounting rests on one simple idea: balance. If a business owns something, it came from somewhere. Either it was borrowed or it was funded by the owner. That's why this equation never breaks. What you own equals what you owe, plus what belongs to you. Start a business with your own mat alone, buy equipment. The numbers always connect. Nothing appears out of thin air. Nothing disappears. It only moves. And that's where the double entry system comes in. Every transaction hits at least two places because money always has two sides. Buy supplies with cash, supplies go up, cash goes down. Different accounts, same total value. This system isn't bureaucracy, it's protection. It's the reason errors get caught, fraud becomes harder, and businesses can scale without chaos. Now comes the part most people misunderstand: timing. If you do the work today but get paid next month, when did you really earn the money? If you wait for cash to move, you're reacting late. That's why serious businesses record income when it's earned and expenses when they're incurred, not when money finally changes hands. This approach shows reality, not optimism. It reveals whether a business is actually performing well or just delaying problems. And here's why all of this matters in the real world. Investors rely on these rules to compare companies. Banks rely on them to decide who gets loans. Governments rely on them to tax fairly. Without accounting principles, trust collapses. The irony is this: accounting isn't about numbers. It's about truth, timing, and transparency. And many of the ideas we still use today trace back to Luca Pacioli, whose work formalized the logic that businesses still depend on centuries later. In the next video, we'll turn these principles into something visible, financial statements, and learn how they expose what a business is really worth. Subscribe and continue with the playlist. This is the Learning Studio. I'll see you in the next lesson.